Welcome back, everyone. This is Dave Ganderos here. This is my YouTube channel. I made a video a little while ago. I published it. Let me see if it's showing up here yet. Still being processed, it looks like. I don't even see it. Where did it go? Yeah, it's still being processed by YouTube, so it'll show up. But basically, it's my day 48 of progress in my opportunity here, my journey to 100K annual salary equivalent passive income generating opportunity that I'm sharing with you. Right now, we're going to do a little bit of an update on the Cardano and the various cryptos that I've shown you before. Just want to show you the little thumbnail that I'm going to be putting out with the video. But basically, we got to update the charts. So I was showing you how there's a bullish flag pattern forming, and these are all considered continuation patterns. So if you're in a bull market, uptrend, these are the types of patterns that will show up, and it's basically an indication that the price action has a higher probability of going up with the trend. And these are the types that will form. So we have a couple that we had basically all the four that we showed the other day. We're all pretty much forming a bullish flag pattern or a pennant. Well, mainly a flag pattern because it was a channel here. But now a couple of them are getting revised into a falling wedge pattern, and I'll show you that. We don't have any negative bullish continuation patterns to show, but you should really go on Google and do a search for chart patterns and get familiar with these, because these are very high probability trades that you can wait and watch price action to fall into, and then take action as they break out. So what I want to show you here is what the revisions will make to the charts that we have going. Before we do that, again, this is my channel. If you're looking at the video, you probably see a screen like this. Please don't forget to like and share. Subscribe if you really like it and you want to be alerted for the next video. And just look under here, about the various topics of the video. As you can see here, there's some extra videos that I put in here, and I added more. I add more every day to this list based on my other videos. So if you want to look for other technical analysis type information, you can come down here in the description and just click on here instead of trying to find it in my channel. These are just keywords. And again, please comment. Let me know what you think about the video, your thoughts. For example, someone asked me about ADA going to 83, and basically I replied and I commented, and we need some channel interaction. So please take some time and make a comment. Let me know what your thoughts are. Maybe some other coins you want to see me talk about. Unfortunately, I haven't had a lot of extra time, so I've been focusing on the four that we have. These are the top coins of interest, based on looking at my channels. Once I put out a video about these four, the video viewing has gone up a lot. So it's pretty obvious you guys like that. So I'm sticking to the four for sure. And then as time is going to allow me, I'm going to branch out and answer some of the other coins that you've listed. Maybe later today or over the weekend, I'll have a little bit more time. I'll do some of the other ones that were listed in the comments, and we'll share information that way. All right, so let's get into the charts. I just want to give you a quick update to where we were and where we're going. This platform had a couple questions. It's called TradingView. I'll put the link in the description. If you decide to upgrade, you get some money. I get some money. We all make some money. But this is a really core product that you should use if you're going to think about doing any kind of manual trading or charting and technical analysis. You get so much for the money you spend. You could sign up. There's going to be a Black Friday promotion every year where you get up to 50% off the price. So regardless of what you sign up for and what you commit to now, you could always take advantage of that price when it comes out during the Black Friday sale, to save a lot of money. So maybe you go month to month for now, and then when that happens, you go for a yearly plan or something, whatever fits into your budget. But it's something, that you really should consider buying for yourself. All right, so let's start with let's just go through the list of coins that I have here. We were forming. We are actually still forming. It's debatable. It could be a falling wedge or it could be a bull flag. Since the top is a little bit tapered down and the channel is not really parallel, this is probably more of a falling wedge than a bull flag. So usually with a falling wedge, see if I still have. Let's just do a real-time search here for all of us. Falling wedge. So with a falling wedge, you typically measure the distance between the high and low pivot of the initial swing of that wedge, and you take that distance and you place it on the breakout, and that's pretty much the target for that price. So if we do that here, like if you consider from here to here as the initial pivot of this pattern. Now you can bring this in if you want to, you want to look to maybe touch as many wicks as possible. So you can play around with that bottom. We're looking for the breakout on the top. So you can play around with these. This goes away. This was the falling triangle, a descending wedge that I mentioned earlier. That was what we had on this chart, and now we have to revise it to represent what really is happening after the new price action since the last time we looked at it. So as you can see, as you pull these out further, you can see that it's forming more of a wedge than a descending triangle now. Descending triangle was good until it broke the 50 fib. Once it broke down here, there was some volume, so it could continue coming down here, but as you see, you got some Fibonacci action down here at the 618 and the 65. So we've always been targeting possibilities that this retracement from this pivot could come down to 65 and bounce off of that. Now it did hit the negative target that we had set based on some downward targets that we had. So it did hit that, and it came very close to the second one. And ideally, that's probably it. I mean, some people are talking about it still coming down here. It really could. But just think about all the money that's flowing in, and I don't know. I really wouldn't go short. That's my personal decision. I would maybe wait for it to come down there and maybe buy then, but I certainly would not short hoping that it's going to go down, because as I said, this is a continuation pattern. This is a falling wedge, and that it's higher probability that it's going to break out as opposed to break down. But you don't know. You don't know what's going to happen. You just got to sit back and set the trap and wait for the price action to do it. As you can see here, we're pressing the upper trend line, and we could be seeing soon a breakout. So what you do is you just kind of now you do, since the descending triangle kind of didn't play out, kind of get rid of those. And like I mentioned, the target for a breakout of this type of pattern is from the top here to the bottom of this pivot. But instead of going sideways, all you really got to do is just kind of draw it straight down, and then you could just drag it over here. And if this happens to be the breakout, you can see it's still kind of and you could kind of see the breakout, depending on where it is, could be equal to the top of this pivot right here. So certainly, if it's coming down here, if it takes this long to break out, then you could start seeing that maybe this is the first target. Maybe if it breaks out, this is your first target to get out, and then this is the next target to get out. And in fact, we realize that there's some resistance here based on this price action to the left. There might be hesitation here. So depending on the breakout, where it happens and when you get in, you can consider scaling out of your trades as it approaches these green zones that we put on the chart a while ago. So again, this is kind of just what you got to do. You got to kind of sit back and just wait for it to happen. And depending on where it happens, you move this down, and you can kind of see the target of the pattern. And again, you don't necessarily have to wait for it to come here to take profits. If you get in here and you set your stop loss behind this trend line, below the trend line, then you could decide like what is a good return for you. Like for example, if you get in here and you go to here, you're going to make 8%. If you go to here, you're going to make 15%. If you go to here, you're going to make 26%. So you got to decide what you want out of your trade, your risk to reward. Use proper mitigation stop losses, and as price action breaks out and moves up and down with ebbs and flows, you could continuously increase your stop loss to for sure get into the break-even trade, right? So you don't lose any money. And then if there's good spikes higher, then slowly pull that stop loss higher to even go from break-even to knowing for sure you're going to make some kind of money on the trade. Maybe you get out 50% here, and then you leave the rest to possibly go higher. And based on this situation, based on this Fibonacci and the retracement, there's algo targets for it to get up to here. Again, I hear people talking about 750 and all $7.50 ADA. Right now, we're looking at a shorter term target. This is like trades that could happen within a couple weeks or so, or a couple days, even a couple hours, depending on the momentum. So I'm not looking at the big picture of the full cycle here, but if this is a trade and this is the type of trading that you want to do, these are the targets that you can consider getting out and just take a step back and wait for a price action to retrace again to get into the next trade. There's going to be another pattern that shows up. There's going to be another trade set up. You don't need to get greedy. Again, you're going to have two pots of money, right? Ideally, you're going to have your long-term holding for those Cardano price targets of between $5 and $10. And then you're also going to have maybe some money you want to get in and get out and generate additional funds along the way to add to your long-term holds, right? That's what the trading account should be used for, is to generate some extra Bitcoin or whatever and then move it into your longer-term holds when price action makes sense. Or maybe you're just dollar cost averaging for your long-term holds, and as you're generating profits from some of this, you take a certain percentage of your profits and you just buy and you move that over to your long-term hold positions. Anyway, that's my strategy. That's where we are with Cardano. So this is the kind of like the revision that we had to do. We had a descending triangle here based on the 0.5 fib. Once it broke out, went down, it did hit our initial target. So if you got into a trade, you were profitable and you should have been thinking about getting out as it's going down lower. And with this Fibonacci, you should have been realizing that there might be some reactions when it hits the 65 and might start moving back up. So it's a small little trade, but you could have made, somewhere between 10% or maybe a little bit less. 10% if you actually timed it perfectly, but more than likely you're going to probably make about 5 to 6%. So a nice little trade if you did that. Personally, like I said, I'm not a negative shorting type person. We're in an uptrend. We're in a bull market. I tend to stay away from shorting. I know there's always money on the table that we're leaving, but I don't know. I just kind of I set the patterns up and I just wait for when it breaks up to the upside. When it breaks down, I just let it go, and just if nothing else, I wait for it to come down to a lower price to even get in at a lower price for when it does turn back bullish. So this is where we are right now. Again, for ADA, somewhere between, if it breaks up, somewhere between the 135, 136, and the 148, maybe 150. something around that. Could be the short-term price targets if this decides to move upward instead of downward. And like I said, you can see the bounce off of the 6.5 and the 6.18, which is a typical reversal area. And this is the bull wedge, falling wedge in a bull market in an uptrend. So higher probability for it to break up rather than down. All right, so next one, Bitcoin. All right, it looks like, so we're on the 4-hour. Within the 4-hour, it seems to still be in the channel that we have here. If you drop down to a lower time frame, actually right now it looks like it might be breaking. So these are still in the works. There's a target up here from the fib. It's 54.9. There's, you know, the peak of this previous pivot right here is, you know, going to probably show some resistance. A lot of price action around here. And you can see some resistance at 49.9, maybe 50. So if you're in a trade here, those are some areas that you can consider scaling out. So there's really no revisions to do to this right now. We'll see what new patterns show as this price breaks out, see if we get to our targets. But again, you don't have to wait for the targets to hit. You can scale out of your, you know, your trade and move your stop losses up to break even as it's going up. So, you know, don't let greed get you where it goes all the way up and then you find out it's a double top and it comes crashing down. So just lock in your profits, wait to fight another day, wait for the next pattern to arrive, wait for the breakout, and you know, that's how you compound your account, by taking the profits. There's nothing wrong with taking profits. You can't lose by taking profits, and just be humble and don't go for the kill, because as they say, greed will kill you. You know, pigs get slaughtered, right? As they say. So figure out what's good for you. There's really nothing to change in this chart pattern right now, and we can move on to the next one. This is Ethereum. It's still on the 4-hour mark. It's still kind of adhering to this channel, although it's not really parallel anymore. Well, I guess you can argue that you could bring this down a little bit and bring this up a little bit. So it could still kind of, on the 4-hour chart, it's still falling in here. But if you drop down to a lower chart time frame, you can kind of see where, you know, it's false breakouts. Here you have basically almost a double bottom, which is a reversal pattern. It's happening at the 0.55. So this is kind of telling you that double bottoms typically change direction of price action. So you can see here, after this double bottom, it did kind of shift and it's starting to move its way back up. So it's got to fight through the moving averages. It's got to fight through this trend line. And again, you can see this trend line is not that great. You know, it's kind of not been respected 100% on the 1-hour level. So what can we do here? Yeah, I'm not really sure what to say here. This is not a perfect pattern, but it's been kind of you know, it's still kind of sticking to it. Although, like I said, it's broken out on the upside and it's broken out on the downside. And you really don't want to move this out just to fit these, because then you're going to lose more touches and more price action here. So you really want to leave these here. I guess what you could do, if you really wanted to, you can add a pitchfork, you know, to this swing low to swing high, and then kind of tweak it to it, you know, touching multiple positions here. So when you do a pitchfork, and it actually does what it's supposed to do, your goal is when you have a nice pivot here, the price action, when it moves away either from the top or from the bottom, there's an 80% chance that it's going to hit this median line. So it took a little bit of time, but you can see, you know, if you were the type of person to want to go short, you can see how it did come down, and actually now it was hovering around this median line. and now it's breaking out. So you know, the other thing to do is to put another pitchfork, you know, on this pivot, and you figure out where it's going, but still not in an upward channel. You know, you kind of, this one's not really telling you anything. Let's scale out a little bit. Higher time frame, see if it cleans up a little bit. Oh, I guess you could draw one from over here, from C to D. You know, this is a higher time frame pivot pitchfork. And again, as I mentioned earlier, you know, coming off the bottom or coming off the top, there's an 80% chance that it's going to make it to the median line. So when you're looking at these pivots, and if you put a pitchfork in there and you start, you know, unfortunately here, when this happened, you really didn't have any other pivots to kind of see where this should be marked. So along the way, you would have been, you know, trying to make it fit, which is not easy. So, you know, you'd have something like that, and then when a new price action happened, then you would move it down here somewhere, and then you just got to continuously revise this to make it like most, you know, to fall into what price action is. But once you got this pivot here, you could see that it did hit that and react to those levels multiple times, and even on the downside, you could see how it picked off these median lines, and you know, as it came down, it actually represented this as almost like a trend line, where it's like it came down and it came back up. So pitchforks have use. You know, if you have a solid pivot here, you could throw it on there, and then you kind of just play around with price action. Like, right, you know, when this first happened, all you could really do is really what you're supposed to do from high to low, and then you go to the previous low if you're drawing the pitchfork. So really, when this pivot was cemented into the price action, none of this would be here yet. You'd have to just set up your pitchfork to look like this, and then what you would be doing is, you know, watching it go to the median line, and then as price action starts happening more and more, you know, right now this is actually still legitimate, even though wicks are falling below here. This is still a legitimate angle for the pitchfork because price action didn't close below that. And then even when it does close below that, what you can do is you can go into the pitchfork and you can start putting 1.25, you know, wider ones on there, and see if, you know, some of these extra ones that you add, if there's any correlation. You know, sometimes price action comes out and comes back into these pitchforks, just like this channel that we were talking about. You know, sometimes it's not 100% sticking in there, and sometimes you find some that are like totally like 100%, like respecting every little line here, and you can see how there's a little action right there. But for now, we don't need these two, so I'm going to clean up the chart. And also, what you'll realize is when you have an up pivot, a pitchfork that's pointing up and a pitchfork that's pointing down, a lot of times when you get the crosses of the two different pitchforks, you tend to see price action do some moves. Like, so you see that cross, you see the price action kind of made a pretty explosive mini move here. Same thing up here, like right around that last, you know, cross of the pitchfork that's going down and the pitchfork's coming up. You saw some action. Here you didn't see any action because this pitchfork didn't exist yet. But yeah, so it's just some interesting things that you can do with pitchforks as well. But right now I would just keep this clean, take that off. It's still within the channel, so to speak. It's, you know, on the 4 hour, it is sticking, you know, within this channel, so we should just extend it. But, you know, higher probability, if it does continue down, you know, chances are it's going to make some reaction moves when it comes down to the 618 or the 65. So it's up to you if you scaled in. You know, like I've said in the past, you could have the strategy of starting to scale into a position between the 0.5 and the 0.65. So you could certainly, start getting into positions when it's in this range. And that's only because, like I said, a lot of times it will come down to this area, but a lot of times it could react and go up from the 0.5 to 0.55. So you got to decide where you want to scale in. These are like 4 levels, so you can do 25%, 25%, 25%, 25% of whatever your overall position you had in mind to do on this trade. You don't have to go all in here. You don't have to wait to go all in here. You can cost average in, just like you should be cost averaging out. Like, for example, if it breaks out, you have to extend. You have to kind of extend this, but the further down it goes, you're going to get in lower, and this could be considered maybe your first target to get out based on previous analysis we did. So right now this is sticking the same, nothing really to change here. You could kind of see possibly a descending wedge here, but until it breaks out or totally voids this channel we're in. If it avoids this channel and just continues going sideways further, then it might turn into a descending triangle, because you could see the downward path. Unfortunately, that's a negative. That's a bearish sign if that happens. Right now, this is still considered a continuation pattern, bullish pattern, and ideally what we're going to see is we're going to see it break out. And from our previous analysis, if it breaks out, you take the pole length, place it on the breakout area. Say example, it happens somewhere around here. Then you can see it matches our 1700 area. So for example, it didn't happen here, so we get rid of that, right? Price actions is down here now, so this is now the new reality and the new possible targets. And just like I said, if price action stays in this channel and it continues down, you just gotta move that. Maybe it comes down here, and then you could see there could be some resistance on this previous peak right here. If it hits the 0.55 again, or it breaks out here, then maybe this is your first. This I'm not sure what's going to happen here, but this was an area that we figured out that might be some resistance. But for sure, at the peak of this previous pivot, and then here, this was based on some price action to the left, and then this right here is the algo target based on this Fibonacci pivot retracement. So, the algos that are getting in for longs are going to try and get the price up to here to get out, and these are the areas of interest on the upside. Right now, I guess on the downside, you have stuff down here between 1100 and 1000 or so between this area here. So if it continues to be negative, continues breaking through these action areas, the golden pocket in 779 or 786, this is like the point of no return. If it breaks through this, then it typically is a negative thing happening here. So we'd have to, once that happens, if it breaks through this area, then we would have to come in and take a look and see on the negative side. This is also a double top possibly here. So it could turn into a negative direction here. Until this level is broken, this level right here, 660 approximately, or 657. That once it breaks through there, then you probably have smooth sailing back up, to either 1700, or like if you go back to this peak here, 1800. It's probably going to go back up to those levels if it breaks through the 1657 or 1658 level, whatever, this peak right here. So that's what I see on Ethereum. Still within the bull flag pattern. I guess you can argue that there is a possibility that we're seeing a just realize that there's different ways to look at this. We could be forming somewhat of a wedge. That could be what's happening here as well. But good news is either the flag or the pennant and the wedge in this formation is a bullish signal. So if you draw it the other way, you draw it this way, we are still considering the breakout of this. And if you bring this down here, nothing really changes, because if you're still measuring either the pole or the distance between these two pivots, so the target stays the same. However you want to draw this this pattern. So I guess just to have both options on here, we'll just do this. We'll draw these both. But it doesn't change the price targets, because either it's the flagpole or it's the width of the pivot within the wedge. So both of them correlate to this, and we just got to figure out where it's going to break out to where it can go. If it breaks out here, then you can see it's going to push possibly up to this target. If it breaks out lower, then you have these two to worry about as possible times to get out. If it breaks out down here, then you can see some actions going on here. Some wicks, some support up here, some more wicks. So 1600 could, if it goes down this low to the pocket, 1600 could also be an area of resistance on the upside. So again, it just depends on where it breaks out, where you got to kind of consider possible areas of resistance. So again, it's hard because there's so many different levels. We're on the 4 hour, so these levels are pretty strong. The higher the time frame, the resistance levels mean more than on lower time frames. So on the 4 hours, these are the areas of concern on the upside when the breakout happens. Right here, like you're right at a resistance level, so it's going to be hard to get pushed through this. But if it breaks out with a lot of volume, then it might be enough to just crack right through this, and then your next one that you might see some sideways action or some rejections are up here at 1600. All right, guys. I think that's it. Oh no, this Chainlink. All right, so Chainlink. All right, so it's obvious that this flagpole has been negated. It broke out. It's down here now. So basically, what we do is we delete. We delete this because this trend line is no longer holding. This is gone. So again, this channel's gone. This is gone. So now we let's just clean the plate here and kind of start over. That's what you got to do when patterns that you drew aren't holding. And so then you go back in and you kind of figure out what's going on now. So you can see there seems to be some action, some rejections happening here, and then you can kind of see where this could also be forming some type of wedge. So again, we're migrating away. It looks like this is applicable to all of them, right? We're migrating away from the bull flag to more of a wedge patterns. So that's all you can really do. You just come in here and you redraw it to what price action is showing you. You don't anticipate anything. You draw what you see, and then you use the past information to give you more clues. So with that, now you could put your Fibonacci retracement back and then start setting some ideas. So you do see that there's action again at the 618 and the 65. So there's a good chance that it put in its bottom and now it's finding its way up here, and it might be a breakout up here. And again, from what we just talked about wedges, you basically measure the two levels. So yeah, so realistically, let's just keep it like that. Basically from the peak, right? go from the peak, and then you kind of figure out where the pivot low is on your pattern. So, you know, we're going to assume that that's the high to low. And you just slide this over to the point of breakout. If you're assuming it's going to happen around here, you know, and then you just kind of move with the price action. If it's going to continue moving down here, there's going to be a squeeze here. You know, it's either going to go up or down, because this is kind of like the consolidation level that we're seeing here. So as this approaches this downward trend line, and the 6.5 and 6.18 Fibonacci's, you know, this is getting to the apex of this kind of like a formation. So worst case scenario, you're probably going to see some action down in this area, but it could happen at any time. So you just got to move this along to figure out where it could be. Now, some obvious targets on the upside. Let me see if I have any smaller zones here. Got this big thing here. Let's draw some new possible zones here to move around. All right, so, you know, obviously there's the algo target, right? You want to put that here? Oh, I have some over here. I'm not sure why it's so far away, but these are previous resistance levels that we've found. This is the Fibonacci 618-414 level that could happen. And then you got some immediate term things to get through, right? So we zoom in a little bit, we look at the lower, like the immediate things to break through. And you got a couple of them. You got the previous peak, right? The previous high. So you want to kind of, you know, put that there so you could kind of see where. So the target is actually below that, which is good. Well, actually it depends where you draw from, right? If the breakout happens here, then even though that the pattern says it can go this high, you're probably going to see resistance. So you might want to take a little bit of profit a little bit below that. But if price action continues to come down, now you can see the target from the pattern is kind of just at the peak. So, you know, maybe we'll see some more side action until that happens. And then if it comes down all the way down here, you can see that, you know, it's not even at the peak of that one. So then you could kind of look left and see if there's other levels. Like, you know, there might be a level right here. You saw some resistance, some wicks, some support. So, I mean, there could be a little bit of action and some resistance down in this area. So you just kind of you got to be aware of where the support and resistance to the left is to kind of see where you should place your. If you want to scale out of your position, you want to kind of look left and look at resistance levels. And if you're watching the charts real time, you can start seeing, all right, well, it's having a hard time pushing through this level, and maybe I should cash out a little bit. So you got that level, you got the peak, the previous peak, you got the algo target from this Fibonacci pivot. So these are the three little hurdles that you have to get through before you can consider the bigger time frame resistance levels and the algo target on the Fibonacci extension target up here. So just some thoughts. Like I said, you gotta, like, we had a flag pattern that had to be changed because of price action. This is what reality is now, and you have to be dynamic enough to redraw the patterns to what price action is showing you, and then from there you set the trap and you wait. And if there's a breakout here with high momentum, like I said, all four of these are kind of reacting in the same way. And when you really look at it, this one was modified to more of a wedge. This one's modified to be more of a wedge. This one still, oh, it looks like it just broke out. Bitcoin's breaking out. This was a bull flag. But you can see this one's a wedge. So as you watch Bitcoin break out, you know, and continue higher, it should be, see how these are going up and this one's going up? They all kind of follow each other. So looking at one can kind of tip you off to look at the whatever one you're in. So if you're not in Bitcoin, but you're watching Bitcoin at the moment and you see moves happening, that should tell you, go look at your other coin that you have a trade on and see what's happening. And you know, depending on the explosiveness of Bitcoin, it could allow you to blow through these upper resistance levels, or if it's stalling here and you're at a resistance level, then maybe you consider taking some profits, right? So these are all correlated right now. The one that wasn't correlated that seems to now be following is Cardano. You know, you can see this was a downward, this was upward. They were inverse, but now they seem to be connected. Probably because they're all hitting the 618, 65, except for Ethereum. They're all kind of hitting that lower bound area. So they're all kind of primed to pump and push up off of that level. You know, a lot of people watch that level. A lot of people trade that level. So that's why sometimes it's smarter to get in a little bit earlier, so that you get in before everyone else and you're already in a position as it starts blowing up. And, you know, in case price action doesn't come down this low, you're not missing the boat, and you have you know, maybe, like I said, maybe there's 4 levels here, so maybe you do 20%, 25% each. And, you know, if it didn't go that low, like for example for Ethereum, if you wanted to wait until it hit 618 and 65, you would never have gotten there. So, but if you would have gotten in a little bit at 0.5 and 0.55, you would at least have 50% of the position that you were looking to get in on, and you're not going to miss the boat if this is the move higher. You know, this could be a fake out. This could be, it's just going to hit the resistance and it's going to come lower, and you'll still have that chance to add to your position. Same thing here. This one's out, so chances are it's not coming back down. You know, it just depends if it's going to have the momentum to go up. Now, today's Friday. A lot of people are getting paid, so maybe there's going to be a lot of new fresh money coming in. So, you know, Fridays tend to be good. Just be careful trading on Sundays. It seems to tank very badly on Sundays. So you got to figure out what you're comfortable with, and get involved with what you can afford and what you're willing to put into the game. So with that, I hope these 4 summaries and revisions helped you understand how you should approach the charting, and how, you know, just because you drew something a day ago, it's just estimations and probabilities that you're doing. And as price action opens their book and shows you their hands and their poker hands, and it shows you what's going on, then you got to revise. You got to continuously revise and update the charts to what reality is, and set the new trap and wait for those traps to happen. Like, for example, this was a trap that you could have been waiting for. So right now you might be in a trade. Right now your stop loss is here. As it's starting to go higher and you start seeing new pivots, or you determine support and resistance lines, you could start moving your stop loss up higher to at least break even, which would be your entry down here. Or if it's farther enough up, you should try to put it just below another support and resistance level or a pivot, and lock in more than just breaking even, and scale out as it goes up. You know, scale in as it goes down and scale out as it goes up. That's my approach. So that might be good for you, that might not be good for you, but that's my approach, and that's what I'm sharing. Again, follow other people that are doing technical analysis and see which one works best for you. Practice charting, get the hours on the charting. The more you do, the easier, and you start seeing things faster, and it just becomes second nature after time, you know. Or some of them are just so messy that you just don't bother with. Like, if there's no obvious chart pattern or no obvious possible direction it's going to go in, and then it's just you're shooting in the dark if you're getting involved with a trade, because you don't really know what the heck's going on. It's so chaotic that there's no probability in your favor of taking a trade. So there's other assets. You know, there's so many different cryptos out there. You just stick to the, you know, the top ones that are out there, and you'll be okay. Again, I haven't gotten into sharing Forex pairs or anything like that, and I haven't even had time to add some of the other ones. I started creating a layout for some of the other ones that people asked. So I just haven't had time to really do the analysis on these. You know, you got VeChain, Voyager, Aave, and not sure what this one is. Oh, Graph. So I started laying it out. I'll dig into it over the next couple days, and you know, real quick, you could see that this is a kind of a flag wedge. Aave is kind of falling into a wedge. You know, kind of almost broke out. Voyager, I didn't really look at. It looks like it's in consolidation between two ranges. So there's not really much to show there, other than when it finally you could just do real quick. What you could do in a situation like this is just draw an upper line, here, and a bottom line, and just wait for the breakout from those two areas. You know, either on the downside or the upside. You know, if you're looking for longs, you know, getting into trade should be down in this area because you want to make it go up. You don't want to buy at the high. If it's up here, don't wait to buy until it actually breaks out and tests and then goes up. Although I really like this pattern, because if you look here, it's created plateaus, breakout, plateaus, breakout, plateaus. And the more consolidation happens here, when it finally makes a move, it's going to be explosive. So if you're a bull, wait for it to break up. If you're a bear, wait for it to break down. That's all I can say about this right now. So again, I didn't really want to get into this, but I brought it up to show you guys. I did want to show you that I'm looking at these and kind of getting more acquainted with these, so that I can talk somewhat intelligently to you. But again, you know, a lot of these are kind of all over the place. You know, you can kind of see the same thing here: plateau, breakout, kind of like a falling wedge kind of thing here going on. You know, again, these are all bullish things. So you know, in some ways, use what I've taught on these other charts of putting patterns on the charts and practice and see if it plays out the way you think it. Like, for example, you know, put a trend line up here, you know, and put a trend line over here. You see, it's wacky. I don't really know what to say about this one. Right? It could be something like this going on. But again, you got to get familiar with certain pairs, and you got to follow the price action, and you don't want to worry about jumping around on all these different pairs. You just want to get good to understand basically the characteristic of the pair you're looking at. You start seeing that it always reacts in certain ways, and the more familiar you are with that, you know, it's going to allow you to be a higher probability trader. So I mean, you kind of say here, this might be a this might be some type of triangle pattern, you know. Draw something like this. Yeah. Then you get a better idea. You just got to kind of do it a little bit. You can't just, you know, expect to know it right away. So you got to get familiar with the chart. You got to get familiar with the asset, and you got to kind of see what it does, how it acts compared to Bitcoin, all those kind of things. It's going to take a while for you to get that knowledge. You know, a lot of times if you go to higher time frames, charts kind of clean up a little bit. You can kind of see, like right here, this was a consolidation phase. You know, maybe even a rising wedge. You know, if you chart it out. Could have been something like this. I hate this. Sometimes this magnet thing doesn't allow you to do what you want to do. You know, that could have been a rising wedge at the time. You know, in fact, it could be something more like this. You can see it broke out. And just for the heck of it, since we're on it already, like I said, I really don't want to do this to make this video longer, but it makes sense since we're here already. You draw that line, the width of the base, and you can see it blew past that. It blew past the target. The reason why this got scaled down, if you notice, it's because I'm on log. Log takes, makes it a little bit more easy, so it's not so crazy. Look, if I take this off log, it's actually not too bad. But a lot of times we'll condense it down and actually make it fit on a window for you to look at. But you can see the breakout of this rising triangle, ascending triangle. Price action's higher and higher, and then it's hitting this level on the top. At that breakout, the price target, if you would have had that charted, you could have very easily cashed out here. And now, like I said, it might be forming, another wedge, ascending wedge. So now you could kind of see where it, where it could break out to the upside again, and then you just take this again and you measure the width between, the peak and the bottom. You take that and you put that at the point of breakout, and now you have an idea of where it can go if it breaks out. So again, I'll do a video specific on VeChain and others, but just since I brought up these charts, I'm sorry I made this video longer, but you can kind of see what's going on with VeChain, and I strongly advise you to take what you've learned from my other videos and try to apply it here. This is just quick. I mean, this is literally, I'm doing this real time with you, but you can see, on the daily and the higher time frame you go, these patterns are more probable. When you get down to the lower time frames and you try to do something, a lot of times it won't do what you think it's going to do. But you kind of want to figure out what you want to do. Either you draw at the wicks or you draw at the bodies. Now, if you draw at the bodies, you can do something like that. Yeah, you just got to wait for confirmation. If it breaks out, you got to make sure it comes out, closes, maybe comes down and tests. This is a pretty big. A lot of wicks, a lot of resistance up at this level. So you got to be careful getting involved up here, because it could be another fake out. As you can see here. So personally, what I would do is I would draw it all the way up here to these high wicks, because that's, if it breaks through there, then it truly is a breakout. I mean, you can go a little lower to cover a couple more wicks. But if you draw it like that, if it does break out, for sure it's, nothing's for sure, but it's higher probability that it actually is a true breakout, and you're going to want to look. So just like when this broke out, you see all this volume, you're going to want to watch to see a spike in volume like this, because this is a lot of times the confirmation that you need that it is a true breakout. As you can see over here, these wicks, other than this one because that was part of the move, these other wicks here, you see how volume is lower than that high peak. So that kind of should be an indication that it's just kind of like price discovery and consolidation. So it's pushing higher, people are selling, pushing higher, people are selling at this level. The people that got in lower are happy with cashing out profits at this level. So every time it pushes up, you're getting out the hands that want to get out, and now you got new people that are in at this level. And as it consolidates and creates a base here with people that are in on this level, now those people are going to look to get out at a higher level. So at that point, when there's more people looking to go higher than lower, that's when it typically happens, right? And I'm going to leave it there because I could continue talking for hours here, but just put it at the wick peaks here, because then that's really, if it gets past there, it's a higher probability that it actually is a breakout. And again, monitor the level of the volume. That's going to tell you if it's truly breaking out or if it's just going back and forth like normal. And again, this could be, it could not. I didn't do the analysis. This could be correlated to Bitcoin or it may not. You know, so you could kind of, if it is correlated to Bitcoin, you could play the momentum of the Bitcoin moves to come here and make sure you look at this to see if it's going to break out, you know, if it is. And if it's not, then you got to find out, like maybe you have to look at this, you know, just set an alarm so that when it happens or getting close, you know, maybe somewhere up here, you set an alarm that it's getting close to the breakout area. That'll bring you back to your charts and you can watch it and see what's happening. You could also do just a limit order for something above here, you know, or however you want to do it. That's up to you. But all right, that's it. It's 55 minutes, almost an hour here. So VeChain was added to the analysis on the fly, and I'll take care of talking about some of these other ones maybe over the weekend, or if I feel like making another video later today, I'll do another one and talk about some of these. Again, in the comments section, please post comments. What coin do you want me to talk about next? What, you know, give you some ideas on how to chart and see what's happening. Again, this is not financial advice. This is educational. I'm just trying to show you how you could put things on the chart to kind of give you a better idea. Again, we haven't even talked about it, but there's RSI and there's other things that you could be looking at to kind of give you the extra insight, you know. Right now it's kind of like in the middle here. But like using this as well, you could see there's some divergence. High, lower high, and then you got high, low and higher low. There could be some price action change here. So those are other things that we didn't even get to talk about yet. So I'm going to just stop here. Again, I added another minute and a half to the video that I didn't want to do. Subscribe to my channel, hit the little bell, put some comments in the video comment area. Hit the little like button and share this on social media to allow others to come and learn about technical analysis. Again, I know what I know. Other people know more. Other people know less. So hopefully those that know less are taking away some value from these videos and some ideas on how you guys can become a little bit better at technical analysis, or even if you haven't done it at all. You can see here it's not that hard. And the goal is to set the trap and wait for price action to fall into it and just take action upon breakout. You don't want to just blindly go in on a trade in the middle of a pattern. That basically is equivalent to you going to roulette and putting it on red or black. You don't know what's going to happen, and you just want to take action when price is actually doing what you set up as a trap. So once it breaks through here, that's when you get into a trade. All right, guys, take care. Till next time, have a great weekend and look for my next video.